Now this morning you ask me a question which you talk about. Let's say, for example, we're in an uptrend like this. Market is in an uptrend, and then suddenly market started to make something like accumulation. This is accumulation. If I'm correct, that was your question. Now you say, if market is making such accumulation, let's say this is our support, and then this is our resistance level. Now, if market break out here, I think I've forgotten the question. Can you repeat it right now?
Yeah, okay, we are in the right path now. Now, for example, if market wants to break from here, this last stick now that wanted to break out now, for
Yeah.
example, let's say is a bullish. Yeah, you get me now. So when it now break out, is it going to be continue as bullish, or it goes both way? It can break out as bullish and then bearish.
If
You get what I mean? Before it retrace,
if
before it makes it retrace. Yeah,
if it break to the upside and then continue like that,
exactly.
or it will break and then come back again.
Exactly.
So that is why there is a fake breakout, what we call a fake breakout, and then we have a breakout retest, and then we have a breakout and continue like that. It is a steady scenario. It can be fake breakout. A fake breakout, it is the one I mentioned. I give you the example in the morning. Let's remove this. Let's say now market came here to this resistance. Now, a fake breakout, how do you identify it separately from a real breakout? A fake breakout usually comes above the resistance with a candle body, but later it will reject and come back and close like this. All right, and then we still have another type of breakout, a fake breakout. Sorry, a breakout with a body candle somehow like that, and then another bearish candle will open. Oh, sorry. Another candle will open. It will open like this, and then bearish candle come back, which is going to be bearish candle. You see? So this is a breakout of your resistance. It can either be your support, it can be the same thing. The same thing applies. So you can have a breakout with a body candle, and then another candle open and come and came lower, bearish candle, and then continue to the downside like that. You understand? Look at what we have on Bitcoin right now. This is a good example. This is a good example. Look at accumulation. You can see how market is accumulating between your support and resistance. And then suddenly, what happened? A breakout. This is a breakout of your resistance. And then suddenly came back inside the resistance again. So this is type of thing that we call a fake breakout. But how do you know it differently? How do you know a fake breakout? Normally, a fake breakout usually comes with a body candle and then leaving a rejection above that level, which I showed you yesterday on gold. Like this one. This is a fake breakout. You can see it came all the way down and then go back inside. This is a fake breakout and then return back to the upside. A lot of people, when they see this bearish candle, very strong bearish candle, they will think that the market will continue to the downside. All right, this bearish candle. A lot of people, a lot of traders, they will jump inside a buy, they will sell, and then before you know, you will see the candle return back inside the trend line, inside the support, and come back and continue to the upside. All right. Now there is another scenario of this one that just happened right now. This one that just happened right now. We break out, and then many people will come back, because when market break out of a resistance, sorry, I made a mistake. If a market break out of your resistance like this, normally we usually have a retest of that resistance. Now that your resistance is now your support, it's no more resistance. When market break out from it, it will be your resistance, it will be now support. All right, we usually have support. We now have a retest of that support, and then the market will continue going to the upside. That is a normal breakout. That is, this one we call it breakout and retest continuation. All right, breakout, retest, and then continuation. And then we have immediate breakout, which is breakout from your support, from your resistance, and then market did not even make any retracement, it just make a little bit pullback and then just continue to the upside. All right, it will not come up to your support to come and retest. To come and retest, it will just make a small pullback, small. It will not even come to the support, then we just continue. This one is, we call it immediate breakout. So, but when you are in the forex market, that is your job. Your job, it is not for you to focus. You just have to know this thing is not for you to be saying you have to cram everything. It is something that you have been taught. You have been taught of it. You have been taught. They have already teach you. You have been taught. So in the future, those things you will be recalled. Everything will be recalled by because you're already seeing it. You know your support and resistance. You know that you market breakout. The best thing as a trader is to say. That's why we say 85 or 75%. It is a waiting. It is a waiting in the forex market. It's 75%. You are just only waiting in the market. Only 25% is say for you to execute your trade. Like 25% is for you to take trade. So 75% or 80% even, it is for you. You are just waiting for a confirmation. So only 20%, 25% it's for you to take your trade. You are getting the point?
Yeah.
So you, as a trader, you are giving the market enough time to tell you go ahead, not you just to jump inside the market like a bear. So you need to give the market time to tell you that, okay, yeah, follow me ahead, not you to enter with force, with like a fear of missing out, because a new beginners trader usually have a fear of missing out. A fear of missing out, which we call FOMO in the abbreviation. FOMO, fear of missing out, because when you see candle, aggressive candle, you say, hey, let me enter for buy or sell it. Now, like this, a lot of traders, they jump as they see this candle was coming. They will think it is a retracement. They will say it's a retracement of the support, breakout and retest. A lot of people, you see, even me too, I put my entry here like I was telling you. All right. So if I could not have sufficient experience and then to master my patience, I could have entered for a buy from this level, and then suddenly now, before you know, you can see the way it stopped me out. This is how the thing will just stop you out. So that is why it's good to always have sufficient patience. Master patience. When you master patience, then the rest will be easy. Let the market to tell you go ahead before you go ahead. Don't just jump into the market. So understanding this concept, it's not for you to always say you have to cram everything. when I talk about even those the trailing stop, even the break even, it's not something that you have to cram it. Even the candle pattern, it's not something that you need to cram it. Since you have been,
Possible.
you cannot cram everything. It is only just when you were studying in school, in a normal school. What do you study in school? I don't know what you study. If you study business administration, everything that they taught you in school that time as a business administrator,
Mm-hmm.
you are. It's not that you are cramming them. It's not that. If not that, everything has to be recalled. As you are seeing that,
Recall, yeah.
those situations are presenting themselves to you, you need to be recalling that this thing that I was taught of this thing.
Familiar.
This thing look familiar to me. You'll be just be remember this thing. It's not by cramming them because something that you cram, it is something
Yeah,
that you say
familiar you say we come automatic that this is what it means. It's not what you put in your head. It's not possible.
exactly.
It's a
So
whole book. Mm.
so it is something. It's a process. It's a gradual process. Not don't force it. But these things is just part of your studies. What you are teaching, what we are teaching, or what you are learning. So you need to know that after you already identify your support and resistance, so anything can happen. Either a breakout or a reversal. Your
Uh-huh.
support, either a breakout or a reversal. Your resistance, the same thing. Either a breakout or a reversal. So if market breakout, I take my trade. But if you see aggressive candle like this breaking out of of your resistance, it is always good to give time for a retracement like this one. You wait because when aggressive candle break out like this, that means there is a lot of smart money traders, which are that is the one that we call smart money concept. So they are the one coming into the market. When you see something like that, it is for them to trap retail traders. So you don't want to just jump into the market blindly. You don't want to take your time because you have to follow their footprint. You want to put your leg where they are putting their leg because you know where you don't know where you don't know anywhere. You just want to follow their footprint. You want to follow their leg like this because
I see where you're making
they are
from.
there in the market with their heavy money, heavy billions of money. They just want to manipulate traders. So if you don't know as a beginners, you just though we are going to lose, you are going to make losses. That is part of the game. It's normal. As a beginner, you have to lose money. It's not that maybe you are learning or maybe you can see me, I'm applying the same concepts every day and I can make money. You also yourself, you can just start making money. You have to lose at the first place. There is something that I just saw on the Instagram today that now because me I love watching anything that are concerned about this motivation forex motivation. You see now anything that concern forex. So saying that when somebody tells you that I've spent over 5 years learning to master forex, if the person is not really telling you that, it's not referring to I've been studying forex for 5 years or trying to master how to trade forex. What they are referring to is that they are trying to mastering themselves for good 5 years. It can be 1 year for you to learn. It can only be 1 year or 2 years. But inside that 2 years, or inside that 5 years, you learn for 2 years or 1 year. But the rest of the year is for you to master yourself as a forex trader. Mastering your personal behavior towards the market. So that is what cost a lot of traders in the market. It is not only by trading, placing, even if it is only to trade, you can press buy and sell button anyhow as you want it. That one is very easy. But how do you know exactly when to buy, when to press that button, or when to close that button, when to deactivate that button? That is the most important part. So mastering yourself
Mm-hmm.
as a trader, it takes a lot of time.
Yeah.
So it is a gradual process. Let's check the trade now. Yeah, I think I'm in loss. We're still in loss. If you even go to both,
Bro, don't make it lost. I understand the concept of what we
that is not a
what you
problem.
are trying to say.
That is no problem. No problem.
I
If you already
understand it
understand
because
this, I'm happy that
um
you already, but I'm still going to show you the.
we we
So If you continue right now, you can see now, this example is what I just showed you on Bitcoin right now. You can see this thing I just draw here. So, but there are some times, like example right now on gold. Gold come to the resistance several times and is unable to go beyond the level. All right. What you are waiting for here, this one line, we can call it an accumulation because these are inside the range band. It is a range band market inside between short time, just a short time trade between the movement that is making it a short movement between here to here, here to here, here to here. This is what gold is doing. For now, this is we can call this accumulation. Right now, below this, all this below here, below this support level right now, there is a lot of liquidity sitting right here now. Above here, there is a lot of liquidity sitting right now here. Yes. Why? Why there's liquidity here? You know, we talk about liquidity. Liquidity is just basically money, traders' money, stop losses. Stop losses people. I mean stop losses of traders. Because
sell stop or many
sell stop, buy stop, everything. You must have read that one in the
yeah, I understand that one as well.
So what happens is that markets usually often come to all those like this support level now. You can see rejection, all this one level right now. These are a lot of liquidity sitting right there. Sometimes market can come, you just see market will just see with a aggressive bearish candle. It can just be coming, come. When you see such candle, it is for liquidity. It should come and grab liquidity. Then suddenly you see the thing will come back, rejecting, and then go back to the main direction of the trend. And then sometimes it can also run above this resistance. It can run above this resistance, making a lot of traders to jump inside the trade. People that have traders that have fear of missing out. For them not to miss out of this long bullish candle, they want to jump inside the trade right here. Say, hey, gold don't break out. It has break out. Let me join the rally. They want to join. Meanwhile, you see immediately the market will just return. Like what it happened here. Before this candle was already going above here. Before it just started coming back again. So such things is what we call no fear of missing out, no complete confirmation before you jump into the market. So now, for example, on gold, if this thing go beyond this level, it just close above here with a body candle like that. It is preferable to buy the next candle that is going to open. That next candle is going to only come a little into that resistance, to that support, and then reverse, go back up. We can do like that because when such candle break above, when candle that is not like that one on the Bitcoin, look at this one, how large it is, very big. All right, this one, it is more dangerous to buy on a retest. Sometimes it can come like a gold. Gold usually respect it. When it break out with a very long candle like that, it will come and respect that support. Or if there's any fair value gap after that breakout, gold will likely to come to that fair value gap, fill it up, and then continue to the upside. That is what usually happens. You remember what happened here that day, here that day, or even here that day. Before, there was a range in here, and then the market break out, causing a resistance. There was a resistance here, but there was a fair value after the breakout. Later came back, fill the fair value gap, and then continue to the upside. Break also this one. You see, you can see the breakout. It came back for a retest and then continue to the upside. After the continuation, there was another fair value gap here. The market came all the way and then before going back up again. So gold specifically usually respects such information. All right. So you identify all these fake breakouts when you see candle, very large candle breaking out of your resistance. Give it time. There will be time that sometimes it can continue like that. You don't panic. It's better. I always tell something to say, Sheriff, that if you have your capital in your trading account, your capital for that day, if maybe you have plan to trade for that day to make money. Yes, everybody will come to the market to make with the aim of making money every day. But if you do not see your setup for that day, it is not by force for you to place trade. It's not by force. Your money, your capital, if it's in that, it remain into that your account. Nothing will ever touch it. Nothing will happen to that your money. Instead of you taking a wrong trade, if you maintain your capital inside your account, it will be better than say you just place any wrong trade, and then that will cause you loss. So when you see breakout with a very strong bullish candle, it is better to wait to see confirmation very well. Candle will come back to that support. The way the candle behaves, that is what we tell you. First, confirm if there's no fair value gap. If there's fair value gap, wait for that retest, coming to that resistance, coming to that fair value gap. It can be under the support, under your support. It can be under there, no problem. The thing will come, especially on gold. This thing happens often. It will come testing that fair value gap and then go back to the trend line and break the trend line and go back, continue. But in a scenario that it did not come back, when you see the bullish very strong and then it just continue like that, it's because there's a lot of buying power. When there's a lot of buying power, gold will not remember to come back for that moment. It will first of all go complete the mission above, then later, maybe the next day or next 2-3 days, before we now come back down to that support, to that breakout, and come and test, fill up the gap, and then continue the next other day. So that is how you understand your breakout: fake breakout, immediate breakout, and then confirmation breakout. That is how you know it. But it's with time. It's not now. With time. Don't force it. The one you know now.
I just want to understand the concept because I've been looking to take a trade. When I now come across it this morning, when I was reading it, I was like, wow, this is good, this thing. When I see everything, I was like, I've been doing the same thing. But you now bring it that, okay, if you want to confirm your buying, where to place your buying, and then you now indicate that when it breaks your structure, and then you don't have to go immediately to the market. You have to wait for the confirmation. As you have to wait for the confirmation, is either you let the candle finish the hour, then the next candle is going to indicate even whereby maybe you are going to buy or you leave the market or you wait until it trace back. So that's why I was so confused this morning. But it's well clear now. It's well clear now.
Yeah. Okay. There was something I told a sheriff. Even yesterday, even today, I still telling him the same thing. We still have class this morning. I was telling him. Yesterday, I told him, I think I explained to you what I explained to him yesterday about this trade yesterday. And I told him that when you see, if the candle cannot continue to the downside, because according to what I was saying on the chart, I'm expecting that gold is supposed to go to the upside. But should be in case, if you cannot enter the way I enter aggressively, wait for a confirmation. So your confirmation is going to be one bullish candle, very big bullish candle, which is this one. I say, look at all these candles that you can see, very small candle. I told him, if you see any candle that open and then go and open very big like this, bullish candle like this, you can take your trade from the next candle that is going to let that candle to close, that bullish candle to close first, to confirm that there is a buying power in the market. Now there's no more seller that time, because that time, for this time, there were still sellers in the market. But what can make this type of bullish to come out in this type of market direction? Because you can see the candle are very small candle. So what will make market to print another big candle? It means that the buyers are stepping into the market. That's what I told him. So that means that bullish, let the candle to finish on the 1 hour time frame, and then, or even 30-minute time frame, you confirm it, and then the next candle that is going to open, you should take your trade from it and put your stop loss, and put your stop loss below the big candle that closed before, and then you can target anywhere, you can take your profit anywhere you like. That's what I told him yesterday. Today, the same thing. I still told him the same thing. Look at that strong bearish.
No.
I told him the same thing today. This thing in the morning, this thing was happening, all this thing was happening. I told him, we make class. I told him, I'm expecting to come and take buy from this level. But should be in case, market might not come back to this level for today. Maybe it's another day, because there is a high impact news tomorrow that is going to happen tomorrow, Thursday. So maybe gold will likely to go up today, but tomorrow it will likely come back to this low. But me, I'm expecting to buy from here this morning. That was what I told him. But for me to buy, if I want to buy, it should be in case. So if I see that the market though is not coming, it did not come here today, that means I need only one bullish candle to confirm if I am going to buy for that time, if I'm going to buy. And I told him the same thing I told him yesterday about here. I said, if I see bullish candle, look at the way the candle was doing since morning. All this one was since morning. This is what candle were doing since morning until this level. I told him if I see any bullish candle and I see the way the movement is going, I said I will buy, and I will send the information to you. I will tell you that I've entered to a buy. That's what I told him. And immediately I saw that candle. Even this candle has not finished for me. It has not closed yet. But I said I was going to enter. I enter aggressive. I don't want the candle to close before I confirm it. I already confirmed the movement. And I took the buy and I sent it to him straight away. I sent it to him. I said, stay alert. Should be in case if you want to trade. Look at what he said. He even sent me, he even messaged me. This is what I told him. Look at it. Look at it here. I said, I'm taking the buy. I take the buy. The reason I buy is because I'm sure if it will go, I'm sure it will go back to support again. I'm not sure. I want to say I'm not sure if it will go back to support again for now, but the bullish is very sure. You can see. That is what I told him this morning. We make class around that 11 o'clock like that, and I sent to him. When I see confirmation, I will let you know. So if you trade, apply risk management. I am not giving you signal, so you should know. That's what I told him. I'm not giving you signal because I want you to have your own personal knowledge.
You make it clear.
It was very clear. And then say, okay, I know. He did not say anything for that time. He didn't tell me anything that. He didn't tell me anything. Say, okay, good. Then later, when the market was already giving me profit, what is happening now? When it's already giving me, look at it. This is when the market was going. And I sent it to him. Now you're not telling me that it's not in the house. Say it's in the supermarket. Ha. Okay. But when me and you will have class, I told you to stay in the house, stay alert, so in case if there's opportunity for you to trade, so that you can take trade and also have small money. The day when you're supposed to take trade, you will not be on seat. The day when you're not supposed to take trade, you will not take trade, you make loss.
You are not working now.
I can't tell you, I say, Alpha Baba, how do you see it? Do you see the setup play how? That's what I was trying to refer there. Now you not tell me, send me message, you say it's not in the house, now send me picture. I was very annoyed with them because you could have made money with me on that trade. I make here, this thing was already giving me because it is $52. But
you even use 0.3.
It's 0.3 that I use. And then when the market go up again, I put another entry from up here. And at that time, the market was already giving me about close to $100. Look at it here. This is it. This is how I take my trade. This is how I usually take my trade. Now, this is our topics. You can see now, this is what we call a break-even. A break-even. Look at the entry that the buy I bought from here. You can see the buy. Now, the stop loss was here before. The stop loss was below here before.
Exactly.
Now you can see I put the stop loss on top the buy.
On top with the buy, exactly. You move it from there to there, yeah.
To the here.
From
Now,
that,
exactly. So the buy, another buy I took here now, I put the stop loss here. This is the stop loss here. I'm risking the
you
same
have
money.
already made your own money already. You know, the money you are risking now is out of the game. Now
It's,
the one you have won now is the one you are risking.
it's the one I'm risking now. The one
Okay.
I won from here now is the one I'm risking for this trade right now.
Mm-hmm.
So the stop loss for this one is the one I put here. So the stop loss for this entry, I put it on top here. This one is not a trailing stop. This one is a break even, because when you put your break even, a break even is your stop loss. You put it on top your on your entry point, on your entry point.
Yeah, that's fine. Mm-hmm.
So when it is a trailing stop had to be like, for this stop loss now, I need to put it like somewhere where this one is right now. The stop loss for this below entry, I need to put it like this, where this one is right now. That's where that one, it is called a trailing stop, because now the profit between my entry point to where I put that stop loss, that profit is already been secured. It has been secured. So if market go and come back, stop me out, I will only make small money. For this one, I will not make any money. For this one, I will not make any money. All right. But what will save me here is because I will lose small money, because the stop loss I was having for this is 0.03 lot size I use for this one. Now this one I use 0.02. So the stop loss I'm using here was about $25. Here this one I was risking about $55 for this trade, because it is 0.03 lot size. So it is more higher than 0.02. So as I've already removed that stop loss, I put it on a break even. So if market come and stop me out for this one, I will not make money, neither I will make loss. But for this one, I will lose only $25. That is if market come all the way and stop me out here.
All the way and stop it down. Yeah.
I will lose only $25. You can see now that I lost money, but it's not too much as initial risk.
At least it's still your gain, because you at all you make something out of it.
So you understand, that is what we call trailing stop and a break even. At the end of the day now, this market it was already giving me about $100, 90, something like that dollars. But it has not reached my TP. Now I move my stop loss, this one, I put it here. I have it right there. That was giving me about, I think I was having about $30 as a trailing stop. And then this one, I reduced the stop loss. I reduced the stop loss to $18. Now the market go and then come back. That's why you see gold now like this now. The market came and stopped me out somewhere around here. So I make something like 40 or close to $50 like that. That's what I make on this trade in the morning. You understand? But I've not met my daily target. I've not met it. I'm still expecting to make another small money. If this one did not stop me out, though, that is part of the reason why I even entered this trade. But I'm not supposed to enter trade because the market is not good today. But if this needs to go back to this resistance level, it's fine. I will close the trade. Now I've already shown you what I wanted to show you before. I think like this, my battery for this thing is bad. You understand? So that is the difference between your trading stop, your stop loss, your breaking. And then you understand the parts. You understand the accumulation, the breakout, fake breakout, fake and retest, break and retest, and then immediate breakout.
Yeah, it's very clear now, because I was very scared about it. I don't want to just to make
You can see
any move.
See Bitcoin now.
Because I'm using the money as my personal money. I just don't want to do it as a bit testing emotion. I want to apply what we call
Risk management. That's what we call risk management.
risk management, exactly. So I want to do it in a perfect way. Even though if I make the money to 3 or 4 thousand, then I can say, okay, I want to use my personal money now.
So how much is the money at right now?
Right now, the money, because the trade I went to use yesterday doesn't, I lost yesterday because the money is still around 260. No, not 60, no, 510. Let me check it
205.10.
quick.
That means you have lost. You have been losing, eh?
Since 3 days now, I've not make anything.
That means I say that what I'm saying now. They have been losing
Yeah,
because the money, the capital initially was 25, isn't it?
yeah, it's 2.5, but I still have the 2.5 there. The whole profit I made last week, I've lost it this week.
But I heard you say hundred and two
Ah,
thousand
no, no, no,
five.
no, no. No, no, 2,000. You know, the whole money was 2,500, but I have 2,000 as out of this Monday, at the Tuesday. The whole money that was there was 2,600.
Ah,
Yeah, and then since 2 days now, I was
mm,
making loss. I tried the lot size. I use 0.3. The margin I will give it, I will try 40 euro, 50 euro. I
mm.
see that I will make money at the end of the day. I see that I've not yet been accurate with the market. Like,
The
okay,
market.
when exactly to, yeah, so I don't still want to rush my, but the whole money is still there. It's still there. I'm not yet losing, to be
Okay,
honest.
okay,
Not yet losing. So I
okay.
can still give myself a little bit mark of, okay,
Yeah,
I'm making profit, but I'm still losing as well.
yeah.
But I'm satisfied for now.
Okay. That is better. That is better. So as long as I can maintain the capital, that is the most important thing. That is the most important thing. But now there's something I need to tell you. Me, how much you see is my capital? My capital
700.
is let's say 700, right? That is my capital. With my 700, because I'm using high leverage, the leverage I'm using is 1000 times ratio 100. Unlike your own that you are using, it is 500 ratio 100. So my own, it is multiplied by 2 of your own.
Thank you. Mhm.
So any small amount of money that I'm risking times 2 of that money.
Yeah.
If I'm risking 0.02, you too, you are using 0.02. That means
You'll be losing more
I'm
than
still
that.
risking more than you.
Mhm.
You get it?
Yeah, yeah, yeah.
So now, for example, now my point is that what I need to tell you is that you are here in the forex market. It's for you to make money. Before for this little money that you are here to make money. You are not here to come and say maybe you are looking for tancho like
No, 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 no.
all right. When you have $2,000 account, $2,000 account is not $200 account. It is not $200 account. It's 2,000 on a daily basis. At least for a $2,000 account, you need to make at least 400, 500.
Hmm.
Yes. So if you are risking, that means you are risking at least 200, 300, or 150 to make that 500 or to make
That's
400.
500.
Yes. That is for that $2,000 account. So now you have $2,005 account. So it means that your lot size that you are using, does not worth it according to your capital that you have.
Hmm.
Because highest, what for you to make 200, 300, 500 with that lot size that you are using, you need to let the market run for too long for you to be able to make 400 or 500, even
I
300.
noticed that. Mhm. Mhm.
So for you to be able to meet up with your daily target according to your initial capital, you need to let you need to use you need to increase a lot size. You need to increase the lot size
Okay.
at least minimum to be using on $2,000, $2,005 account. It will be
Mhm.
0 point. I mean, it should be one standard lot or minimum 0.2. One standard, one single one,
Who using 3? 0.3.
or once that is one standard, one lot
Mhm.
or 0.2
Mhm.
or 0.15. For that $2,500 account, that one worth it. So that by the time the market moves 20 pips, 30 pips in your favor, you're already making 500. But if market go against you also, you lost. You can lose 300, you can lose 250. So it means that you are not be you cannot be you will not be risking only $30 that I want to make $200. That is impossible. It's possible, but you need to let the market to run for long.
Yeah, it's not going to be a day job like 2 days, something like that.
For me now, right now, I want to go and reduce my leverage so that I can be able to increase my lot size, because I need to increase my lot size with this my capital. As of now, I'm supposed to be using 0.1 lot size. 0.1, that is mini lot size. 0.1 lot, then I can be making tangible amount of money. This one I'm making $60, $80, but before I can make that money, I need to let the market to run for long. I need to put 2 position, 2 entry, 2 buy, 3 buy, so that I will make like 140, 120 like yesterday. So in this scenario, that is what you need to do. So I'll send you another link now. So for the second round.
Okay.